Hello and good evening, everyone. Today's webinar topic is New Investment Opportunity SRF Should One Invest? So, for this, we have with us Mr. Kunj Bansal, General Manager NISM. Mr. Bansal is a seasoned finance professional with almost 3 decades of corporate experience. In these years, Sir has worked at some of the best brands such as Reliance and Kotak after starting his career at UTI. Sir has worked in the areas related to financial research, security analysis, and portfolio management. Mr. Bansal is an engineer and a management graduate from NIMS Narsimonji University, Mumbai. He writes on contextual issues for various magazines and newspapers, and his valued opinions is sought by news channels like CNBC and ET Now. He speaks at seminars and conferences and lectures at management colleges. Now, a short glimpse about NISM. NISM is a public trust established in 2006 by SEBI, the regulator of the securities markets in India. The institute carries out a wide range of capacity building activities at various levels aims at enhancing the quality standards in securities markets. Now, before beginning the session, I would like to request all the participants to note some important points. First, all participants will receive a participation certificate within 3 to 4 working days. Second, the recording of this session will be available on the NISM YouTube channel. Now, I request Kunj sir to begin with the session.
Thank you. Thank you. Thank you for the generous introduction. Good afternoon once again, everyone, and welcome to this webinar on SIF. So I'm presuming the presentation is visible to everyone, and of course, my voice is also visible. So some of you might want to type in the chat box that are you able to see the presentation and can you hear me? Yes, or thumbs up or something. Okay, thank you. So let's start. So SIF, of course, we have written the full form here as specialized investment funds. But can anybody tell me what else can an SIF be or is an SIF? More specifically in Indian context. We will not be talking of that SIF. So yes, Asim Mandal has written AIF. Yeah, so SIF is, so not this SIF, but the other SIF that I'm talking of is one of the types of AIF, alternative investment fund. So what exactly is that? Can somebody clarify in more detail? As I said, we won't be covering that, but you should know, you shouldn't get confused. So the other SIF is called Social Impact Fund. As I said, we will not be talking about that, but just to clarify, so that's part of the broader AIF, alternative investment fund categories permitted by SEBI. Social Impact Fund, the money collected in that fund is mainly used for the social causes. It's not as much to do with the commercials. And we will leave that here. So we are not talking about that. We are talking here today about SIF as in specialized investment funds. So what is that? So somebody has written volume not clear. I'm not sure if everybody has that problem, then we can check out. If others don't have a problem, then please check Shailendra Singh at your end. So moving back, so what is this SIF that I am talking about? Yeah, can anybody type few things here? That what is an SIF? Specialized investment fund. Full form we have already got. Okay, so let's go more into detail. So to know what is an SIF or a specialized investment fund, can you tell me what is the minimum investment amount required in few other products? Let's say in a PMS. So you can type in the chat box. Yeah. So some of you have written 1 crore, some of you have written 50 lakhs, most of you have written 50 lakhs. So yes, that is the right amount. Similarly, if we go on to the other product, AIF, alternative investment fund, what is the minimum amount required? Yeah, 1 crore, most of you have typed that. Now, what are the other product that we are missing here? Mutual fund, can we say? What is the minimum investment amount required there? Yeah, 100 rupees, yes, and SIP of 250 rupees. So that's the range of the product when it comes to investment amount that is there. Now, either you are at the extreme low end of 100, 250 or 500 in a mutual fund or in an ETF, or the next best is the PMS of 50 lakh. Of course, AIF at 1 crore is even higher. So that's where the regulator, the SEBI, based on the market demand, based on the feedback from various intermediaries, based on the feedback from, thought that can there be something in between. And that is where SIF was brought in, and that's why its name also is Specialized Investment Fund. Now, let's look at it from the one more angle, from the strategy side. So what are the various strategies that are adopted in different products? So let's again start with PMS. Can somebody type in the chat box that what are the strategies that are adopted in PMS? Or whatever basic thing you know about PMS. Okay, so Piyush KDI said that basically long only. So Ananta said equity derivatives that comes with restrictions. So again, equity, small, large, long only. So yes. So largely can we say, so Miraj Ahmed is saying hedging, no PMS, very limited hedging is allowed by way of derivatives, and that also has not been used by, uh, I don't think anybody in the PMS space has used that. So non-discretionary and discretionary, Alvin is saying, yes, that's correct. So that is where a PMS is, as I said, one in terms of minimum. Yes, Manish, puts are allowed, but I have not seen very frequent use of puts in the derivative in the PMS space. So that's another difference from the strategy angle, that PMS probably is only only long only product. Of course, very limited use of derivatives for hedging has been allowed by regulator for long, but nobody has used it. Okay, moving on, AIF. Now, what is the difference in terms of strategy in AIF? Okay, so Amit says long and short. Yes, AIF you can use long and short. What else? Unlisted company, Satyajit say yes, that's also true. You can do that. Then what else? Long short fund for sophisticated investors, small case, unlisted private credit, venture capital, and all those. So yes, so AIF gives a lot of flexibility, lot of freedom to the fund manager, and as a result to the investor, that you can use multiple strategies here. But what is the catch? As we saw on the previous slide, that an investor, for wanting to take advantage of these multiple strategies, he has to have a minimum of 1 crore. Now what? Yes, Asim Mandal, you have rightly written 1 crore. What if an investor doesn't have 1 crore to invest? Should he not take benefit of these multiple strategies? Should he not be allowed to participate in these? Is a question that we will try to answer. Similarly, moving on, mutual fund, what are the various strategies? So largely in line with PMS, long only. The difference is mutual fund is a pooled product, whereas PMS is a customized product. Now, keeping all these things in between is where the need for SIF came in. And as I said, the regulator, based on the various feedback, interaction with market intermediaries, market demand, has introduced this SIF, wherein it has tried to address both these issues. So first issue, it's a new category that has been introduced. Of course, it has been introduced under mutual fund regulation, but to bridge the gap between mutual fund and PMS. And this gap in what terms? So yeah. In terms of, as we already discussed, two categories. One, in terms of the minimum investment amount. Right now, you either have 100, 500 at lower level or 50 lakh. So here something has been brought in between. And also, as I said, in terms of strategy, wherein you can not only do long only, but can flexibly use the derivatives, and not only in equity, in other asset classes also. We will talk about those in detail. And that is where this SIF comes in. As I said, it allows advanced investment strategies with a corpus required at, how much is the corpus required? Can anybody tell me? Yes. So a lot of people have put in 10 lakhs is the amount that is required. So now can you see the difference? You ideally, or not ideally, actually, if you wanted to use derivative based strategies, invest in them, then you needed 1 crore. Because in PMS, although you invest only 50 lakh, but as I said, one, nobody is using derivatives, and in PMS, use of derivatives is only allowed for the purpose of, limited purpose of hedging. not for taking open positions, open short or open long. So that's where this product came in, wherein SEBI said that, okay, we are allowing mutual fund to launch a new product category called SIF, wherein the minimum will be 10 lakhs, so much lower than 1 crore, almost 10% of 1 crore required in AIF. And at the same time, allowing advanced investment strategies to be invested in this product. Of course, as we can see that it is also applicable to affluent. Here we are referring to the 10 lakh. So Miraj is saying SIF can have unhedged positions. Yes, Miraj, we will come to that. You are right, of course. Because 10 lakhs is something not an every individual investor might have. And let's keep in mind that if you are investing 10 lakh in a single product, then it means your overall investment portfolio would probably have to be around 1 crore or even more. So assuming 10% you are investing in one single product, your portfolio size will have to be 1 crore. So not every investor in the market, in the Indian economy, in the Indian environment will have, especially those who are investing in mutual fund. And to that extent, the applicability of SIF comes to the affluent and sophisticated investors. Of course, these regulations have come into effect from April 1. So has anybody launched an SIF? Is it available for you to invest if you want? Does anybody have an answer? If yes, Amit Pundir says yes. Okay, Ashim says that some name. Okay, so let's try to okay, Shivendra has asked what happens when 10 lakhs reduces to 8 lakhs. We will come to that. So all these names you have given, but let me at the outset try to address that these various AMCs have made announcement of launching a SIF. No ready SIF product. If you want to go online or to the AMC office or to your distributor and tell him that, okay, which SIF scheme, tell me about it and I want to invest. Right now, it's not available. Only they have announced their intention. They have applied, some of them have applied to SEBI, some of them have also got permission from SEBI to launch, but no scheme has been launched till date, which is okay because it came only in April. We are in July, it's 4 months. It takes time for things to come on ground. So on ground, no scheme is available, but as I said, from April 1st, this has been allowed by SEBI. Some of the AMCs have announced their intention to launch, some have applied to SEBI, some have also got permission. So minimum investment, we have already talked about. 10 lakh is what you need in this product. And compare that with the, okay, also some other conditions that, okay, so since this product will be launched mainly by existing mutual funds or AMCs, and if you have a 15 or a 20 lakh in 2 or 3 or 1 scheme of AMC, can you say that I already have 20 lakhs with you? So I'm eligible to invest only 1 lakh in the SIF. Can you do that? No, you can't. You will have to have exclusively 10 lakh to invest in an SIF. You can't use your existing exposure to the mutual fund scheme to make that total to 10 lakh or to say that, okay, I will as a result only invest less than 10 lakh. You will have to have a dedicated 10 lakh investment. Of course, you are allowed after investing that minimum 10 lakh in the first round, you are allowed a systematic investment plan. You are also allowed SWP and STP, but there are certain terms and conditions for SWP and STP to be allowed into that. We will come to that. Now, somebody had asked a question, what happens if that 10 lakh falls to 8 lakh? So first of all, though we pray that it should not happen. We all should make money. Our 10 lakh should always grow and should be 10 and a half, 10.7, 11, 11.5, 12 and like that. But yes, if that happens, then the answer is that then your SWP and STP are not allowed. And if you want to do redeem, you have to do full redemption. So that's a condition, but doesn't mean that you invested 10 lakh, it came to 8 lakhs. There is no compulsion for you to fill in that gap of 2 lakh. So AMC won't call you or distributor won't call you or mail you or send you a letter that your 10 lakh has fallen to 9 lakh. So please remit another 1 lakh. No, that will not happen. But as I said, if you want to redeem, then part redeem SWP, STP is not allowed. In that case, you will have to fully redeem. And whenever you want to invest next, you will have to come with the 10 lakh. So these are some of the conditions that we all should know at the beginning of, since it's a new product for all of us. Now, what are the various strategies that have been allowed? As we talked earlier, that SIF has been launched to give some advanced strategies to invest in. Now, what are those strategies? Can somebody quickly type in whatever broad details that you know? So when the actual investment will be starting, it would be till end of December, or when? Let's wait. Sarika, you are asking when? Let's wait for AMCs to tell us. So there are some practical problems, and I'm sure I'll be talking about some of those points, and we will know about that. What could be the expense ratio, exit criteria? Deepak is asking. Okay, we'll cover that. Derivatives are allowed, yes. Long short, equity long short. Besides equity, what else? Unhedged positions are allowed. So what are the other strategies that are allowed in SIF? So equity is already available, a lot of it. Okay, so we'll talk about these. So yes, somebody has said that, okay, three strategies in the equity are allowed. Sector rotation, okay, we'll look at, somebody is asking about the tax implication. So thank you for being an active audience. But let's look at this. So these are the permitted investment strategies by SEBI currently under the SIF route, under the Specialized Investment Fund. So SEBI has permitted three categories: equity, debt, and hybrid. Now within these three categories also there are subcategories that have been allowed. So in equity there are three categories that have been allowed: long short, X top 100, I'll tell you in more detail, and sector rotation. Similarly, in debt, two strategies are allowed, and in hybrid, again, two strategies are allowed. Let me take you through more detail of these, then it will become clearer. So let us look at this slide. Now, within equity, as I said, three strategies have been allowed. What are those three strategies? So first is a equity long short fund, wherein the regulations, the SEBI says that minimum 80% has to be in equity. And after that, up to 25% you can go short. And when we say short, there is no compulsion that short position has to be to hedge the equity position of that 80%. No, it can be purely open short position in some other sectors, in some other stock, in some other indices. So popular indices wherein derivatives are traded in India are Nifty and Bank Nifty. Of course, you can take stock shorts via the derivatives, via futures and options, and things like that. So that is the first strategy that is allowed. That is, as I said, equity long short with minimum 80% equity and up to 25% short. So tell me, if somebody uses this, a fund manager uses this, 80% he has taken exposure to equity and he has gone 25% short. What is the net short position? Can somebody type in the chat box? Assuming simplistically that it's matching. 65, no, I don't know how you reach that 20, maximum 25% of AUM I have said. No. So yes, Manoj Kumar has said 5%. That's the right number. As I said, very simplistically speaking, saying that the 80% equity is balancing with the rest 20% of the short position. Since shorting up to 25 is allowed, assuming he has taken full 25%, then 5% short is what a fund manager is giving you an exposure. Now this 5% short will be giving you money in what kind of scenario? How should the market be behaving for this 5% net 5% short position to make good money for you? Yes, bearish. Yes, thanks Ronak. Thanks Rakesh. Yes, Durgesh, Arshad, all of you. That market should be going down if you are net short. And here, as we saw, that you are net short by 5%. So these are the various scenarios. As I said, it's very simplistic assumption and calculation that I'm taking, which will not happen because the equity exposure of 80 could be different stocks and sectors. Fund manager is free to take the 20% to different stocks and sector. So to that extent, 80% long may not be balancing with the 20% short. It could be compounding, it could be adding to long, it could be multiple combinations are present. So somebody, Vansh Bothra, is asking how much percentage per annum can we expect? I am presuming you are asking about how much percentage return you can expect. We'll come to that. Let's see if we can figure out an answer to that. We'll come to that. For now, coming back to strategy. So second strategy is that SEBI is allowing you that you go beyond the top 100 stocks and then you go in the stocks. So if we were to come to the market capitalization uh, category in the current market, can somebody tell me where will the category beyond 100 will be called, or what are the uh, mid and small? Okay, Amitesh, but I want you to be somebody to be more specific. So Arshad has said mid cap, yes, and most of a lot of you are saying mid and small, but let me clarify. So top 100 stocks today in India are called large cap by way of market cap. Of course, that keeps getting revised twice in a year on 1st January and 1st June. 101 to 250 are called mid cap, and 251 onwards till whatever number we have, 4,000, 5,000, or whatever listed company, all are called small caps. It's high time we should probably have a micro cap and a nano cap category, but let's leave it that discussion aside for now. So coming back to the second strategy here, when we say X top 100, which means now SEBI is allowing the mutual fund manager to go to the mid cap segment. And of course, it's not restricting it to the mid cap. You can use small cap also, as long as you feel comfortable in terms of fundamentals, in terms of the liquidity. And so here it's saying minimum 65% exposure you have to take in equity, excluding top 100 stocks. And again, like in the first one, you can have a maximum 25% in non-large cap now here. That's the specific, because equity exposure also you are taking to non-large cap. The derivative position or the short position also you should be taking to non-large cap. So that's a second strategy which will give you an exposure to mid and small cap, both in terms of long position as well as the short position. And to that extent, that will be the difference from the first strategy to the second strategy. So Ronak is asking, will an investor have a choice to choose a particular category? No, you can choose. So first of all, AMC will announce that a new scheme in SIF it is launching, or a new SIF is launching, so that they will have to announce to you, inform you that in which of these categories they are launching, whether they are launching in equity number 1, equity number 2, equity number 3, or based on that. And then you can always choose, like currently you can choose between a large cap fund, a mid cap, a small cap, a equity, a debt. Within that, you can choose a hybrid, balanced, whatever. Like that, they will be announcing in that. Coming back, the third category that is allowed within equities is the sector rotation long short fund. And here it has been specified. So Sushant is saying more money is required for doing SIF. Yes, Sushant. That's why we said, as you noted, that it is to that extent for relatively affluent investors, and that's why minimum 10 lakh has been. Also, let's keep in mind that it's easier to say going short and allowing derivatives is all. But the moment we go short, we all know that, or we should know if some of us don't know, then that we are moving higher on the risk return curve. So while the expectation of return goes up, the risk also goes up. And that's where also probably regulator thought that this product should only be allowed to those investors who have a certain minimum money with them. And that's why minimum investment has been kept at 10 lakh. So yes, you will need more money. Sachin is asking, is there any data that these kind of schemes do better than traditional equity? Very good question, Sachin. I want you to think and give me some answers in the duration of the webinar. Also, I will see how I can address this question. I will try to. Coming back, third category, as I was saying, is the sector rotation long short. And here SEBI is saying that minimum 80% equity in maximum 4 sectors. So to that extent, concentration of the portfolio is going up, which has implications that if all those 4 sectors chosen by the fund manager do well, your return will be exceedingly well. At the same time, if all those 4 or 3 of those 4 sectors don't do well, then your returns will suddenly be much lower. Which out of the 3 is more riskier? Bhavin is asking. So very broadly speaking, the first one is relatively low on risk, and as a result probably low on return. Second is more risky, and third probably is even more risky. It will depend on a lot of things. It will depend on market condition. It will depend on stock and derivative selection by fund manager within this defined strategy, and things like that. Okay, Satyajit is asking, are there maximum or minimum limit? So if you are asking it from a investment amount of point of view, we already discussed that minimum is 10 lakh, maximum you can invest any amount. If you are asking in terms of investment strategy, then minimum is defined for long position, as you can see in this slide. 80%, 65%, and 80%. And maximum is also defined for derivative position, which is 25 in all these categories. For derivative, there is no minimum. So fund manager can remain at a zero derivative or a zero short position also, in which case effectively it will be a long only fund, and doesn't make sense. If you have to invest in long only, then one might as well go into mutual fund. So Rakesh is asking, is the first one purely large cap and the third one is thematic? Yes, third one to some extent, or rather instead of calling it thematic, let's stay how SEBI has defined it, saying sector rotation. You can come out of one or two sector and choose another one or two sector to invest in. So that's the third strategy in equity category. Moving on, as I said, in addition to equity, there are debt and hybrid categories also defined. So let's move on to those. So these are the debt. In that there are equity. There were three subcategories. Here there are two subcategories. So first one, you have a debt long short fund, investment in debt across durations. So which means you can have a duration which is 3 months, 6 months, 1 year, 3 year, 5 year, even longer, 7 year, 10 year also. And you can take a short exposure via exchange traded derivative. So that's on the debt side. Second one, again, debt in at least two sectors. So like in equity, we saw third category, which was a kind of a sector rotation fund. Here also sectoral debt fund has been allowed, in which you take a debt exposure in at least two sectors. In one sector, you can have a maximum of 75%. So that's the strategy. And again, you can take a 25% short exposure here as well. And that short exposure can be across the sectors. So it can be sector wide. So these are the two categories in which are sectors in debt. Piyush is asking, as I said, completely at the discretion of the fund manager, depending on which. So if he's managing the second one, sectoral short debt, he can choose those sector. But just to give you some perspective from the availability of investment opportunities in Indian market, financials or broader BFSI will be one sector wherein relatively higher liquidity and relatively larger debt papers are available when it comes to the debt securities. Non-BFSI, non-financial sector, it will be lower. So I'm presuming that for any fund manager, if he has to choose two sectors, BFSI will certainly be one. Yeah. Moving on, the third category that has been allowed by SEBI is the hybrid investment strategies. So here you can have an active asset allocation wherein you have dynamic exposure across equity debt. So here let's look at this. Now here SEBI is saying that I am giving you flexibility to give exposure to your investor. That is, SEBI is telling the fund manager or an AMC that you launch a scheme which is free to invest. Today, if you have to invest in all these 3, 4, what do you have to do? Can somebody quickly type in the chat box? You want to invest in equity, in debt, in REIT, and InvIT. What will you have to do? Yeah, okay, you have multi-asset allocation fund, which also do not generally cater to all these. Yes, so Durgesh is saying buy separately. You are right, Durgesh. Effectively, that is what you will have to do. That you will have to go on your app of your broker or online or of the respective AMC. You want to do it directly. You want to buy a REIT. We have quite a few REITs publicly available, listed, traded. You go and buy one or two of those. You want to buy InvIT. We have few InvITs available. You buy those. And similarly, you buy equity funds or debt funds. In equity, you buy mutual fund or you buy direct stocks. In debt also, you buy debt mutual funds or you buy some bonds, up to you. So while you have multi asset funds, they may or may not be using this, but here is a strategy which SEBI is clearly allowing you, in fact, allowing you commodities also. So let's see this as well. And with a short exposure. So can you see everything has been covered? I mean, most of the things under the sun have been covered. So now here is a strategy wherein by making one single investment, you want to be exposed. Of course, fund manager will have a discretion that how much percentage of each category or each kind of investment he chooses. But from a SEBI's point of view, SEBI is giving flexibility to fund manager to in turn offer to you all, to us all as investors, to give this kind of strategy, which is dynamic. And you can keep varying. You meaning a fund manager can keep varying his exposure. He feels he can bring down REIT to zero and increase to InvITs. He feels he can bring down InvITs to zero and increase to commodities and things like that. Along with that, you will of course have a short exposure. So Vansh is asking me, where can we get SIF from which broking app? As I said, while announcements have been made, till now no SIF has actually been launched. So till today you don't have that option to invest, and that's why at an NISM we thought that well in advance, before these investment opportunities become available to you, we should do this webinar, tell you about this product, tell you about pluses and minuses, tell you about multiple strategies, tell you about details. Some of you are asking about fees, exit, liquidity and all. We will be covering, I will be covering that as well. Will SIF have a direct and a regular both option? Let's see if we can find an answer to that, Mandeep. Hold on to your question. Will SIF be an open-ended or close-ended? Both. We will of course answer that. What is a basic need SIF, Sushant is asking. So I am not sure what is your question, but if you want to remain basic, let's stay with mutual fund, which give us pure long only product with an objective to invest for a medium to long term is what we should do. The moment we move to SIF, PMS, AIF, we are no more basic. We are going beyond basic. We are going aggressive. We are going multi-asset. We are going actively managed. We are taking higher risk by way of derivatives and so for only long term. Sushant, you are asking, please stick with mutual funds. Don't come to SIF. And that's where, thank you for highlighting that. That's the reason we thought that SIF, we should do this webinar, because what we noticed that in the market, currently not many people are talking, covering SIF. So while all information is available, we all being busy in our day-to-day lives are not able to go through that SIF and find answers to those questions. So again, thanks for highlighting that. As I said, if you want to stay with basics, stay with mutual funds. SIF is a relatively advanced product, relatively higher on the risk return curve. So while you do expect higher return, but if you don't get those higher return, risk certainly increases. So please be very clear. So SIF comes under MF category as a distributor, I'm asking. So no, while the only mutual funds have been allowed to launch SIF, only the asset management companies have been allowed to launch SIFs. SIFs are not mutual funds. SIFs don't come under typical mutual fund product that is there. SIF is a product in its own. It's a separate product category. Mutual fund distributors, can they be selling this SIF? I'll be covering that yes, mutual fund distributors can sell, but they will have to obtain an additional qualification by passing NISMs. So Durgesh is saying yes, rightly. Is it category 13? I don't exactly remember that, but yes, the common derivative exam of the mutual fund is what any distributor will have to pass before he starts to distribute slash advise slash sell the SIF to his investors. Okay, let's come back. So a lot of questions, I'll be covering them. I'll keep taking them also. So Nikhil, thank you for clarifying that yes, it is series 13 examination. Going back to the strategies, so the active asset allocation on the hybrid side, and second is hybrid long short, wherein again you have minimum 25% in equity and 25% in debt, maximum 25% short in equity or debt via derivative. So that's within the third category of hybrid. Third 2 or third B is what we can say that SEBI has allowed. So quickly summarizing, SEBI has allowed SIF to be launched in 3 categories: SIF, equity, debt and hybrid. And within that, it is given 3 categories in equity, 2 in hybrid and 2 in debt. Yeah. So total of 7 strategies is what SEBI has allowed the mutual funds to launch. Let's wait and watch that which of these becomes the first one available. Sarika is asking, do CFA have an advantage in this market, as they are more of this more in this of derivatives? I don't think I can answer that question in yes or no. It's all the practice, the regular exposure, the risk return, the knowledge. Are NRIs allowed to invest in SIF? I'll try and answer that question. Does it have hurdle or watermark return charges? We'll come to that. Why is SIF being discouraged for long term? I'm not sure who is discouraging that for long term, Ronak. we are only discussing the features of the product and comparing it to other products that are available. Yeah. So now we did some comparison. Now let's do more comparison of the various products, that is PMS, AIF, newly launched SIF and existing mutual fund across various other parameters that a lot of you have been asking in your chat box question. So these are the four categories. So for mutual fund, I have taken ETF. You can simply say mutual fund scheme or mutual fund as a product for that. So here we have already covered that in SIF, the minimum will be 10 lakhs. PMS will know 50, AIF 1 crore, mutual fund or an ETF, any amount 100, 250, 500, and like that. Important point, all these four are SEBI regulated product. So to that extent, we need not be worried or conscious that are they regulated? Is there an oversight? Yes, there is an oversight. Anybody wanting to launch any of these products will have to take a formal permission from SEBI, from the regulator, to launch these products and offer to the investors. They are not like crypto. Just to give you a clarification, I am not propagating any investment in crypto, but I am raising this point that crypto today is not regulated by any regulator in Indian market. So these products don't fall into the unregulated product. So we can have that confidence or comfort that all of these are regulated. When we say regulated, are they giving guaranteed or are they allowed to give you guaranteed return? Can somebody type in answers to in chat box? Yeah. So thank you. Most of you know that yes, they are regulated, but neither will they give you guaranteed return, nor are they allowed to offer you guaranteed return. So if any distributor, any intermediary, any relationship manager, or any friend, family comes to you saying that there'll be a guaranteed return, please take it, know it very well that there will not be any guaranteed return. In no document of any of these product or any of the AMCs will it be returned. So they are regulated, but they are not guaranteed. Moving on, so we have already seen SIF 10 lakh, PMS 50, AI 1 crore, in MF or ETF 100 rupees are the minimum. Now, in terms of strategy, again, we have covered this, that in SIF, total 7 strategies across 3 categories have been allowed to be launched, which are long, short, hybrid. In terms of liquidity, we'll cover in more. It will be a medium liquidity. So there were some questions that whether I'll be able to get exit, where there will be a lock-in and all. Since these will be higher strategies on higher end of the curve in risk return, you should have a slightly medium to long-term horizon of investing, and as a result, liquidity also might be relatively constrained. PMS, again, it's a fully customized strategy. So that's the difference. In SIF, the strategy will be well informed to you in advance. Whereas PMS, when a PMS manager comes to you, an investor and a manager can talk and negotiate. So although most of the PMS managers, for the sake of bandwidth, lack of bandwidth, offer limited categories of investment, but if they are willing, they can offer you completely customized strategy in a PMS. In practice, generally this doesn't happen as much money. Naveen is asking subscription and redemption frequency. We'll come to that. AIF is a very low liquidity. These are product which requires 1 crore investment and are 5-year plus 2-year and 5-year or plus one kind of the horizon investment that is needed. ETF or a mutual fund is a completely liquid. You can redeem any day, you can put in money any day. Moving on, in terms of taxation, some of you are asking. So here are the answers. SIF is owned by fund and has a taxation like a mutual fund. So the same way, short term, long term, 15%, 10%. If you are in the 30% category, then you will be paying that. PMS is an investor-owned product, so you do direct taxation as if you were investing directly into the equities. And depending on the category, if you are a long-term investor categorized, then you pay 10 and 15 long-term and short-term. Otherwise, you pay marginal tax rate of 30% plus. AIF is again a fund-owned structure where in category 1 and 2, you have a pass-through taxation. In category 3, it's taxed at the central level. And ETF and MF taxation, again, we well known. So SIF and MF will have same category of trust. Same category of taxation, I'm sorry. Okay, so there were questions about fees. So here are the answers to those you have. So SIF will generally be charging 1 to 2% fees. Mutual funds are allowed to charge you exit load. When we have an actual scheme announcement coming in, we will know that whether the AMC has put in exit load or not. But by regulation, they are allowed to charge. As I said, fees will be in the range of 1 to 2%. SIP, SWP, and STP are allowed. SIP will always be allowed. SWP and STP will be allowed only to the extent that your investment in a particular in an SIF doesn't fall below 10 lakh. If it falls below 10 lakh, then you will be allowed only one-time redemption. SWP and STP will have to compulsorily stop. So Deepak is asking 1 to 2% fees on profit. No, it will be on the total assets, total investment that you. Entry fees, Durgesh is asking, is it possible? No, there will be no entry load that is allowed. Yeah. PMS, most of you, if you have invested or even if you have not, let me tell you, is allowed to charge a fixed plus performance fees. I have written here PMS, no SIP, SWP, STP is allowed, but you can always keep adding money to the PMS as and when you want. Again, there the requirement, and of course you can withdraw also if your PMS manager is allowing you. Again, he might have an exit load if at all. But there also you can part withdraw only as long as your investment doesn't fall below 50 lakhs. The moment it falls below 50 lakhs, you cannot part withdraw in PMS. Of course, you can keep adding. AIF is allowed to charge setup fees plus carry, no SIP, SWP, and lock-in supply. ETFs are as low as 0.05 to 0.75%. Of course, mutual fund schemes are also allowed around that 2%, just like SIF. So when it comes to fees, the mutual fund schemes and the SIF fees is largely similar. Yeah. So if that is a question, you should keep this in mind. Okay, moving on with some more. So tax, I have already explained to you. For SIF, it will be 15% for short-term capital gain, 10% for long-term. For debt SIF, it will be your category MMR, minimum marginal rate, under which you fall. PMS is already charged as if you are directly making investments. So Shubham is asking any benchmark. Yes. So SEBI had said that SEBI has specified certain in the SIF regulations, given the broad kind of explanation that how should an AMC choose a benchmark, which should appropriately reflect the performance based on the category of its scheme in which it is charging. Okay, so some people have corrected my long-term, short-term numbers, saying that it's not 10, 15, it's 12 and a half and 20. Okay, yes, so you can take that correction. ETF as per MF rules is currently the taxation that is there, which I've said that for ETF and all, it will be similar. So this is a summary table of the comparison that we have been having till now. I will quickly take you through. In case of SIF, it's target. Who is the target category of investors? It's the affluent investor who will have minimum 10 lakh. Mutual fund is first time to long-term investors. To relatively lower end investors, by lower end I mean the people who do not have too much of surplus money to invest. PMS is of course for HNIs and AIF is for ultra HNIs because that needs 1 crore of investment. Minimum investment we have already talked about. The structure also we have said, SIF is a hybrid structure between PMS and MF. The taxation is like a mutual fund. Pooled SEBI regulated investment vehicle, mutual fund. In PMS, it's not pooled, it's a separately managed for individual client. In practice, it doesn't happen that way, but structurally, that is the structure in a PMS. AIF is again a pooled but a privately placed scheme. Generally, there is no NFO, so to say, for an AIF. Strategies we have already talked about. Taxation we have talked about. Liquidity, there were repeatedly questions. So yes, taxation, liquidity in SIF, it will be moderate. Again, it will depend on strategy. In mutual fund, we all know that liquidity is very high. For ETF, you can sell it intraday in the market. For all other mutual fund products which are open-ended, on a daily basis, you can redeem or invest in, and generally in T+2 money, you will get the redemption amount back into your bank account. In PMS, it's a moderate liquidity subject to exit load if the PMS manager wants to charge. In AIF, the liquidity is very low or practically nil. You should be ready to get money only when the fund has been informed to be closed, which, as I said, generally the structure are 5-year plus. So it could be 5+2, it could be 5+1+1. In a lot of cases, after 5 years, it's as and when they are able to liquidate the investment that they have made, and they keep distributing the money. So the liquidity in an AIF is quite low. Suitability, we have repeatedly discussed. For investors, SIF is investors wanting flexibility. For mutual fund, for beginners. So those who are coming first time in the equity market, in the capital market, the best route is to go through the mutual funds. For portfolio HNIs and AIF is, of course, sophisticated investors aiming higher returns, but with a higher risk appetite. So these are some of the important points that are there. Now, there were some questions that should I invest? Why should I invest? Should I not invest? What will be the answer? So can somebody put in some answers that should you invest? Should you not invest? If you should invest, why should you invest? Or if you should not invest, why should you not invest? Any chance of default by the fund? Nikhil Bansal is asking. Protection Live MF. So I don't know what protection in MF you are talking of, Nikhil. As I said earlier, they are all products regulated by SEBI, but none of them guarantees and none of them is allowed to guarantee. So to that extent, there is no protection. If market value falls, whether it is equity, whether it is debt, and we have seen the cases in wherein debt investment have also kind of gone bust in some cases, and investors had to accept negative return in debt funds as well. So that will be the case here also. SIF also, it will be more aggressive investment, so more risk. Going back, okay, so yes, you have given answer. Some of you want aggressive return, you should invest. If you have to invest to reach your goals sooner, faster, hold on to that thought. Harshad is saying, according to your risk appetite, you should choose whether to invest in SIF. Yes, good answer. Shailendra is saying, yes, you should invest as they are launched for a specific purpose. But yes, if you have that purpose. So yes, you lot of answers that you should invest if it fits. Durgesh is saying your profile and goal plan. Yes, good answer, Durgesh, that you have to be very clear. Okay, so while I will not be giving you the exact answer in terms of yes or no, but as most of you have said that you have to be very clear. I have tried to explain you the product, the risk returns associated with it, the strategies, the ups and downs, the positives. We'll talk in little bit more in these details. Now you have to go back and revisit your investor profile, your risk profile, your investment profile, your capability to absorb higher risk while wanting higher return. So risk and return go hand in hand. In an ideal world, yes, we all want higher return with low risk or with ideally no risk. But unfortunately, that doesn't happen. Risk and return go hand in hand. So you have to be very clear about your risk profile, about your goals, about your long-term plans, and then decide that, okay, whether SIF fits into your plan or not. And then you have to choose that whether you want to invest in SIF or not. Now, again, let's also look at some practical considerations in an SIF when a fund manager will be managing it, or in terms of the current regulations. So Madhurima is saying anyone dealing in the trade or equity market is hardly a risk neutral. Yes, Madhurima, you are right that anybody investing in equity is not risk neutral, but unfortunately, a lot of us do not remain, some of us do not know that. So in some of the investor cases, their advisor or distributor do not explain it clearly. In some cases, in markets like this, which for last 4 or 5 years have almost been going up one way with intermittent corrections, and understanding has built up that there is no risk. Unfortunately, that is not the case. So yes, if you are coming to equity, if you are coming to advanced strategies, you are coming to derivatives, including debt derivatives, fixed income derivatives, you have to assume that you know that there is a risk, and you have to know the risk. Riskometer possible for SIF, Durgesh is asking. So yes, SEBI in its regulation has said that yes, all AMCs should give you the riskometer. So whenever they launch the product, you should be expecting riskometer from them. So what are the practical considerations? Have you heard of, in India, very popular shorting institutions or shorting individuals being there? Or let me make my question more, clarify my question more. We probably have heard of a lot of long only investors, lot of investors who believe in buy and hold, and who tell us that buy and hold for long term you'll make money, Indian economy is growing and things like that. We already have a lot of long only fund managers coming in from all of the mutual fund, PMS and AIFs. Can somebody type in the chat box if you know of any short only? Jane, okay. Hindenburg, okay. So are these Indian? Okay, I didn't want to go to individuals, but yes, somebody has typed an individual name. Can I? So that's a one individual's name. Can somebody give me more names? So okay. So the names that are coming are the names which used to be there, probably today are not there. So I'll not go on the individual names, but broadly we can see that we have not been able to point out any institutional short investor. The Hindenburg and Jane Street name that they came, they are not Indian. And similarly, individual investors, a lot of you are giving names, but most of them are long only. You look at their portfolios, you look at their, go through their interviews, you read about them. Most of them are long only. So basically, the point being that the short skill is probably missing in India. The experience of shorting is not there. So while the SIFs have been allowed, whether they will be actually able to have a very high amount of skilled shorting people, skilled shorting individuals, skilled shorting strategies, in to be able to put it in practice, we need to wait and watch. Also, can somebody tell me how much can be the maximum loss when you go short? And also alongside, you are free to tell me how much can be the maximum loss when you go long. 5% no. Whole capital. Sachin, please clarify for long or for short. Okay, so Anant is saying that there can be unlimited loss. Durgesh is also saying okay. So 100% short, no. 100% for both, no. Arun is saying 100% in long. Unlimited loss. So yes. So that's a clarification. That's an understanding we all should have very clearly, that when we go long, the maximum loss that we can have is 100%. So let's say if we bought a share at 60 rupees, the maximum it can go down is to 0, which means your loss is 60 rupees, which is 100% of your investment. When you go short, the loss is not limited to 100%. It can be unlimited. If you don't cut your position, it can be infinite. You can lose 100%, you can lose 200%, you can lose 500%, you can lose more than that, 5,000% also. So that's where going short in the market really calls for guts. And as I said in the first point, is skills. Or else you have to balance it out. You have to use some advanced strategies. But that is something that we all should know, that while these are advanced strategies which have been allowed, there is a risk. Another point is India is a growing market. It's an economy which is the highest growing economy in terms of growth rate. Even if we take the prediction of 6.5% for FY26 and later 6% or whatever, that will be highest growth rate in the world. So for such a high growth economy, the availability of shorting is likely to be lesser. Not that it will not be there, but it will likely to be lesser. We have already seen last 5 years, market has almost been one way. So these are the challenges that will be there when a fund manager manages a scheme for you. Again, a maximum of 25% short has been allowed. Now the regulations don't specify anywhere that at least a minimum 10 or a 5 or 20% short position you have to have. So what I'm saying is that a fund manager will launch an SIF, will take that 80% or 65% equity exposure. When it comes to taking a short exposure for you, he is allowed maximum of 25%, which means he can be at zero. So he can say that I am not finding any opportunity, I am zero. So effectively what he is doing is he is running a pure long only fund and with a cash exposure. Of course, he can go 100% in equity, but if he doesn't go, it will be kind of a balanced fund wherein he'll invest 65% in equity in second category of equity fund, and 35% he can keep in cash if he doesn't find or if he's not able to gather the courage to go short. So which means you have done 10 lakh investment, you are hoping to be benefited from a derivative or a short position, but because he is not finding any short opportunity, he is in the name of an SIF, the fund manager or the AMC is only managing a long only or a balanced product. So these are some of the challenges that will be there when practically when you start when you meaning a fund manager starts to manage a SIF product. Another, and that was a question that came earlier also, that what is the eligibility of distributors to be able to sell or distribute or advise on the SIF. Not any of the existing mutual fund distributors today will be able to distribute this product. They will have to necessarily clear the NISM Series 13 common derivative exam. And if I tell you some broad numbers, today less than 1% of mutual fund distributors have cleared this NISM 13 exam. So again, what I'm trying to tell you in terms of practical consideration is that the people who are available today to sell or distribute or advise you on investing in SIF are practically not there. Informally, they can always advise you without clearing the exam. They can always talk to you about that. But as I said, they can't distribute it until they clear the Series 13 exam. And today, in terms of broad numbers, as I told you, less than 1% of mutual fund distributors are the ones who have cleared Series 13 exam. So that's a big challenge that is there. So these are some of the practical considerations, as I said, are there. Slowly, we are moving towards the end of our session and timing. So if there are quick last few questions, I can take those. Sushanta Ghosh is saying that I have cleared Series 13 with 82% marks. Congratulations, Sushanta. Why I'm reading is to motivate others that yes, you should. Okay, Rakesh is saying that I am also in that elite category of less than 1%. So why I'm saying is that I want to motivate others also to apply appear for the Series 13, clear it. Both for distributors, as I said, you have to necessarily do it. As an investor, if you do, you will also learn about this whole SIF in more detail, that the SIF wherein shorting is allowed, derivative is allowed, how multiple strategies and all those. In fact, a lot of people here are asking me questions about these strategies because of shortage of time and because I wanted to keep this session as a first session. I'm not able to answer them. But if you clear that Series 13, or even if you don't clear, if you go on NISM website, you will anyway get a reading material free of cost for that Series 13 exam and for all our other exam also. So please download that reading material and read it. So you will know that what are the strategies that will be used in these SIF, and you will be able to enhance your knowledge. Can the fund manager not short US stocks? So right now, no. Right now in SIF, for that, mutual fund may again not shorting, but the long only investment are allowed in global funds, or right now there are no other products wherein global shorting is allowed. कब तक launch हो जाएगा? GH Prasad is asking. Very difficult for me to say, sir. So that's what I'm saying. You know, all these practical considerations which I talked about might be weighing in the mind of the AMCs. So while they have applied to SEBI, some of them have got permission, some of them have announced the plans to actually be able to launch. One, they are looking that the distributors are not available. So who will bring the funds? Two, even if they launch, do they have the skill set to go short? Do they expect Indian market to give money in going short? Because Indian market right now in a structurally positive, high growing economy phase. Yeah. So as I said, now we are coming more or less. We have come to the end of our session. I'm continuing to read some of your questions. So I'll take one or two last question. Gaurav is saying thank you for your valuable insight. Thank you, Gaurav. SIF has a direct or a regular plan. Let's wait for the MCs to make that announcement. As of now, SEBI has not specifically told AMCs to launch a direct plan in that. Is the exam created to trade or advise? Okay, up to you whether you want to look at it from a trading perspective or from an advice perspective. Can SIF invest in debt and liquid funds? Yes. So pending, there are some kind of specification given that pending investment, where all can you invest in? But that is not the ultimate objective. Yeah, I think I'll stop here and thank you very much.
Insights, expertise, and engaging presentation made a lasting impact on the audience. Thank you again, sir, for your time and knowledge. Wishing you a wonderful day ahead, sir. Thank you. Thank you.